Infinite banking leveraging. A lever is a rigid bar resting on a pivot, and it's used to help move a heavy or firmly fixed load with one end when pressure is applied to the other end. As a verb, to leverage is to use something to maximum advantage. In the finance world, leveraging is using borrowed capital for an investment, expecting the profits made to be greater than the interest payable. In the world of infinite banking, we leverage our accounts for all kinds of things, including, but not limited to, investments. The end result, though, is still profit greater than the interest payable. I'm going to explain exactly how this leveraging works, how to do it, the process, and how long it takes. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the past several years now, I've focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. Now, once you have your properly designed, participating whole life living account set up, it becomes your tax-free cash growth warehouse. And that is where your private infinite banking cash wealth grows tax-free. And that's the money that you leverage to finance things and invest. Again, as in the definition of finance leveraging I mentioned just a minute ago, we do this because we expect the profit or gains to be greater than the interest payable. Now that implies that there is interest payable. And that is because leveraging money is done by means of borrowing or taking a loan. Now, in the case of infinite banking, we're not borrowing our own money. We're using our money as collateral. In order to borrow money from the insurance company we have our tax-free cash growth warehouse account with. As I mentioned earlier, we use this leveraging strategy for all kinds of financing, not just for investments. So how do we derive profits when we're not using the money for investments where we expect to make gains on our investments? First, our accounts need to be set up with a company that pays more in compounding dividend interest than it charges in interest on policy loans. And right there, that alone will result in profit over what we have to pay for the leverage loan. That's called positive arbitrage. In addition to that, when we use OPM, other people's money, and that is what we're doing by leveraging our money to borrow from the insurance company, we save all the opportunity costs associated with paying for things with our own cash. For instance, currently the company that we use most for our tax-free cash growth warehouse accounts is paying 6% dividend interest. That means that if we were to pay for something with our own cash, the opportunity cost would be an additional 6% on top of the actual price that we pay. If the thing we're buying is $1,000 and we pay with our own cash, the opportunity cost is $60. But if we use the infinite banking tax-free cash growth warehouse strategy to pay for the thing, we're using OPM, while our $1,000 is earning 6% compounding interest. Now here's how it breaks down. We leverage our account for the $1,000 with a loan at 5% simple interest. So we pay $1,050, but at the same time, our $1,000 is earning $60. We made a profit of $10. Actually, $70 because we didn't lose the $60 of opportunity cost. And we gained $10 positive arbitrage on the deal. So we profited $70. In addition to that, not only do we not have to pay any tax on the $70 of interest we earn, but the $50 of interest we paid for the leverage loan may be partly or wholly tax deductible. For instance, if we use that leverage loan to buy something for our business, whether it's furniture or a licensing fee or stationery, entertaining clients, whatever, the interest on that leverage loan becomes a business expense and is tax deductible. Sweet, yes? Okay, so how does the leveraging process, how is this process carried out, and how long does it take? When your tax-free cash growth warehouse account is in place, you'll be able to establish your own personal account access page online. On that account portal, you will not only be able to see all the information about your account, but you can request a policy leverage loan and make payments. Another option to initiate a leverage loan is to simply call the service line of the company and request the leverage loan that way. Still another option is, at least if I'm your agent, you can call your agent and get the leveraging processing going that way. There are no credit checks and no need to justify what you want to use the money for. In fact, you don't even enter into a repayment agreement. You can repay the loan in any manner you choose. You can make regular installments at any interval that works for you. For example, you can make a loan payment of $50 one month and 3 or more months later, make another payment of any amount you choose. Personally, my wife and I usually make just one payment a year on our leverage loans. The point is, you can repay your leverage loans any way you like. It's your bank, or rather, it's your tax-free cash growth warehouse. Once you initiate the leverage loan, you'll need to choose whether to have the money sent by mail to your address or to have it deposited into your bank account. In either case, it takes about 4 days to receive the loan money. They'll tell you it'll take between 5 and 10 days, but in our experience, the longest it's taken for us to receive our funds has been 5 days. On direct deposit, we've had our funds in as little as 3 days. On the anniversary of your loan, the simple interest charged on the loan will be billed to your account. You will get a statement regarding the loan interest about 30 days before your loan anniversary date. If you don't pay the interest on the loan, the company will process an automatic policy loan to pay for the interest, and that will then be added to the balance of the loan. It's all very simple, and the process is very quick. We hope this answers all your questions about how leveraging your tax-free cash growth warehouse works, the process, and the timing. If you found this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is also in the description box below here. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.